This is TechCrunch. LMArena, a startup that originally launched as a UC Berkeley research project back in 2023, announced on Tuesday that it raised a $150 million Series A at a post-money valuation of $1.7 billion. The round was led by Felicis and the university's fund, UC Investments. Now, the startup bolted out of the gate as a commercial venture with a $100 million seed round in May at a $600 million valuation. This new round means it raised $250 million in about 7 months. LMArena is best known for its crowdsourced AI model performance leaderboards. Its consumer website lets a user type a prompt that it sends to 2 models, with the user then choosing which model did a better job. Those results, which now span more than 5 million monthly users across 150 countries and 60 million conversations a month, fuel the leaderboards. It ranks various models on a variety of tasks, including text, web development, vision, text-to-image, and other criteria. The models it tests include various flavors of OpenAI GPT, Google Gemini, Anthropic Claude, and Grok, as well as ones that are geared toward specialties like image generation, text-to-image, or reasoning. The company began as Chatbot Arena, an open research project built by UC Berkeley researchers Anastasios Angelopoulos and Wei-Lin Qiang, and was originally funded through grants and donations. LMArena's leaderboards became something of an obsession among model makers. When LMArena started pursuing revenue, it partnered with select model companies such as OpenAI, Google, and Anthropic to make their flagship models available for its community to evaluate. In April, a group of competitors published a paper alleging that this helped those model makers game the startup's benchmarks, an allegation LMArena has vehemently denied. In September, it publicly launched a commercial service, AI Evaluations, in which enterprises, model labs, and developers can hire the company to perform model evaluations through its community. Now, this gave LMArena an annualized consumption rate, as the company describes its annual recurring revenue, of $30 million as of December, less than 4 months after launch. That trajectory and the startup's popularity were enough for VCs to pile in for the Series A, which included participation from Andreessen Horowitz, the House Fund, LDVP, Kleiner Perkins, Lightspeed Venture Partners, and Laud Ventures. Enterprise AI company Articulate spun out of Intel in early 2024, and it has secured more than half of a planned $70 million funding round at a $500 million pre-money valuation, according to its CEO, as it looks to capitalize on growing demand for AI systems in regulated industries. Articulate founder and CEO Arun Subramanian said the Series B funding round is structured in 2 installments, with the first led by Spain's Adara Ventures. He declined to disclose the size of the initial installment, but said the company expects to close the round in the first quarter of this year. Articulate's valuation for its current funding round marks a roughly 5-fold increase from the company's $100 million post-money Series A valuation in January of 2024. Since then, the Santa Clara-based company said it has surpassed $90 million in total contract value, the cumulative value of all signed customer contracts, from 29 paying customers, including Hitachi Energy, AWS, Franklin Templeton, and Intel. Subramanian told TechCrunch that Articulate was not under pressure to raise capital, describing the company as revenue positive following a series of large enterprise contracts. He said, "We are not cash-strapped. The company expects to finish the year with annual recurring revenue of just over $57 million, with roughly 45 to 50% of that already recognized." Articulate develops specialized AI systems that operate within customers' own IT environments rather than relying on shared general-purpose models. Instead of selling standalone models, the company packages its technology as software applications and AI agents tailored to specific business functions, targeting regulated industries such as energy, manufacturing, aerospace, financial services, and semiconductors, where accuracy, auditability, and data control are critical. Subramanian said that our competition is pretty much everybody. But today, the major competitors are the cloud service providers because they have realized that their model, as the general purpose offerings, are all commodities. He added that Articulate's focus on specialized systems appeals to customers who need predictable results and clear audit trails, something that is harder to achieve with general purpose models run on shared cloud platforms. Articulate plans to use the Series B proceeds primarily to expand research and product development and to scale its operations internationally, with a focus on Europe and parts of Asia. Adara Ventures' participation will help speed up the European expansion plan, as the European Investment Fund backs the Madrid-based VC firm's energy fund. The company is also looking to scale in markets including Japan and South Korea, where it has begun working with large enterprise customers. Subramanian said that India's Aditya Birla Ventures also participated in the ongoing round. Articulate works with large tech groups including NVIDIA and Google Cloud, and he also said that Amazon Web Services is both a customer and a partner for the company on some deployments. The company employs 75 people, with about 80% focused on R&D and teams spread across the U.S., Brazil, and India. That's it for now. For more articles like these, go to TechCrunch.com.